Opening. Welcome to your daily market news briefing for Thursday, August 25th, 2026. I'm your host, and here is where things stand today. U.S. Treasury debt officially crossed the $40 trillion mark, drawing sharp commentary from J.P. Morgan about the sustainability of the current fiscal trajectory. In the equities markets, the AI narrative remains the dominant thread, but valuations are getting serious scrutiny. NVIDIA dipped nearly 3% on massive volume as headlines question whether the Buffett indicator, now above 200%, means the market is simply playing with fire. Consumer names came under pressure from every direction. DAIC Sporting Goods, Lowe's, Nike, Walmart, all flashing weakness. Meanwhile, Bitcoin hovered around $80,000 and crypto mining stocks surged single digits, and on the industrial side, Shell announced an $8 billion exit from its chemicals business while IEM committed $200 million to a San Antonio manufacturing plant. Let's get to the details. Segment 1, AI and Tech, the rally meets the reality check. The artificial intelligence trade continues to be the centerpiece of the market, but this week, the conversation shifted from pure enthusiasm to a more sober look at where valuations have run. Apple launched a refreshed Mac Mini lineup, signaling serious bets on consumer AI processing as a new growth engine. The move reinforced Apple's positioning within the broader AI infrastructure narrative alongside its hardware ecosystem. Palantir delivered a major win. Its Maven program was elevated to an official Pentagon program of record, meaning guaranteed budget dollars, not just contract-by-contract chasing. That is a structural inflection point for Palantir's defense revenue outlook and sent a clear signal about how AI is being woven into the government's operational fabric. On the commercial side, Dell was highlighted as a new AI rocket, shaped by the convergence of SpaceX and CoreWeave partnerships, with earnings approaching as the inevitable reality check. Aptiv accelerated its production-ready physical AI rollout with NVIDIA Jetson Orin Nano 2 support, connecting the automotive AI story to the same hardware stack powering data centers. And Adobe was flagged as a contrarian technology bet for 2026, a name that has been quietly compounding within the creative AI space. But the star of the show, inevitably, was NVIDIA. The stock dropped 2.91% and traded 135 million shares, the highest volume among large caps, amid headlines questioning whether the Buffett indicator, now above 200%, means Wall Street is playing with fire. Lumentum, a critical player in optical networking, is riding a 1.6T and 200G ramp that is now facing competition directly from Cisco and NVIDIA. The broader point, the hardware build-out is proceeding at blistering speed, but the question of whether current valuations are sustainable is no longer a side conversation, it is the conversation. Segment 2, Consumer and Retail, the weakness is broad. If AI gets the headlines, consumer and retail stocks are sending the caution flag. DAIC Sporting Goods fell on disappointing same-store sales, raising concerns about broader retail performance. Nike's turnaround strategy was described by RBC as correct, but taking longer than expected, a polite way of saying progress is slower than markets priced in. Lowe's cut its outlook as DIY demand continued slumping, even though pro demand may partially offset the headwinds. And Walmart, despite its scale, faces what Oppenheimer characterized as a short-term breather. McDonald's, by contrast, had its unified digital platform in focus, a play on growth potential through technology-driven efficiency in a sector that is otherwise struggling. The contrast is telling. Consumer names that invest in operational technology and digital transformation are getting a pass, while those relying on organic foot traffic continue to face headwinds. Segment 3, Macro Watch, $40 trillion in debt, 31 bearish vs. 19 bullish. The macro backdrop took a dramatic turn this week. The U.S. national debt officially hit $40 trillion, a milestone that drew an apt comparison from J.P. Morgan, which compared Treasury Secretary Bessent's $4 billion Treasury bond buyback program to paying your mortgage with your credit card. It is a vivid metaphor for what many economists see as a growing chasm between fiscal management and fiscal reality. The technical signal scan across 10,784 symbols was even more telling. There were 31 bearish signals and only 19 bullish, lopsided caution flagging potential overextension across several names. On the flip side, top bullish reads included GRML crossing above the 200-day EMA and several names showing strong momentum uptrends. But the bearish count dominates, and the pattern is familiar. The names that have run hardest are the same names most at risk for a sharp pullback. Segment 4: Energy and Industrial Realignment, Shell, Lithium, and Manufacturing. In energy, Shell announced an $8 billion exit from its chemicals business, signaling a sharper strategic focus on its core oil and gas portfolio. The ticker cluster around the story, Shell, ZOM, Lib, reflects how the broader industry is being recalibrated. On the materials side, CDN Maverick Capital moved into drilling lithium pegmatite targets at its James Bay projects. As battery demand and energy storage remain structural growth themes, mineral access is becoming an increasingly critical battleground. And in domestic manufacturing, IEM announced a $200 million manufacturing facility in San Antonio, a bet on reshoring and industrial capacity that adds color to the broader infrastructure thesis. Segment 5: Crypto Rally, Bitcoin at $80K, mining stocks surge. The crypto complex kept its momentum going. Bitcoin hovered around the 80,000 level, and the rally extended to mining equities. Marathon Digital, MARA, jumped 7%, TeraWulf and IREN each climbed roughly 5%, and the Bitwise Bitcoin ETF BITO and the iShares Bitcoin ETF IBIT both saw notable volume, trading 120 million and 96 million shares respectively at or above 2% gains on the day. Beyond the major names, the crypto-linked momentum showed up in the gainers list. BTCT, a Bitcoin-related vehicle, surged 52.6% with 186 million shares traded. These are not small moves in terms of capital. This is mainstream institutional money allocating into a sector that, 5 years ago, was dismissed as speculative at best. Segment 6: The Tape, Top Movers and High-Volume Names. Now let's get to the tape for your quick mover rundown. On the extreme gainers side, DAIC rocketed 306.1% to $1.73 on 102 million shares of volume. XBON surged 80.5% to $6.20. Lucy jumped 63.8% to $1.12 on 195 million shares. And BTCT, Bitcoin-related, climbed 52.6% with 186 million in volume. These moves reflect the kind of speculative, momentum-driven action that thrives in a market where risk appetite is still elevated on the crypto and AI trade. On the decliners, S cratered 52.7% to $324.12, a big dollar collapse that warrants closer inspection. DFNS fell 46.6% to $11.01, and RGNX came off nearly 25% to $8.06. The magnitude of these moves on individual names is a reminder that in a market with strong themes, everything else is a trade, and those trades can cut both ways violently. The highest volume names to watch: NVIDIA at 135 million, INC at 97 million, RITR with a 38% surge on 349 million shares worth noting specifically, JIPR exploding 151% on 286 million shares, Lucy and BTCT as mentioned above, and the crypto ETFs BITO and IBIT both above 90 million shares. Segment 7: Other headlines and cross-sector notes. Here are the other stories worth your attention today. Waymo is set to begin autonomous vehicle testing in Munich, with a full launch planned for 2027. This puts Alphabet on the map for international autonomous driving developments, with Google and Goog referenced. Netflix is down significantly, and analysts at Motley Fool are questioning whether the pullback presents a buying opportunity, a classic question on a name that has consolidated from its recent highs. The crypto and AI convergence story continued to generate debate. Shyamath Palihapitiya flagged 3 AI killers, and the question on some tables was whether Anthropic's rumored multi-trillion-dollar IPO dreams could end up as the first casualty of an AI reckoning. MSFT, Amazon, Google, and NVIDIA were all referenced in the broader conversation. In regulatory news, the Instagram head Adam Mosseri is set to testify at the Meta trial, and Trump's personal portfolio holdings, including SpaceX stakes, Disney shares, and oil and gas positions, continue to draw disclosure scrutiny. On the specialty medical side, the intravascular lithotripsy market is projected to reach $4.19 billion by 2035. And a study flagged that at least a quarter of NFL players may develop brain disease, a story with profound implications for player safety, insurance, and the broader sports industry. Segment 8, Market Takeaway, What to Watch Going Forward. So here is the world you are walking into today, August 25, 2026. The U.S. has crossed $40 trillion in national debt, drawing sharp commentary on the gap between fiscal policy and fiscal reality. The AI trade remains the market's defining narrative. Apple doubling down on consumer AI, Palantir securing Pentagon budget guarantees, Dell's AI rocket heading into earnings, but NVIDIA 135 million share sell-off and Buffett indicator scrutiny remind everyone that valuations matter. Consumer names are broadly weak across NKE, DKS, low, and WMT. But Bitcoin at 80,000, crypto mining stocks gaining single digits, and Shell's $8 billion chemical exit signal that capital is reallocating aggressively within and across sectors. The technical scan is lopsided bearish, 31 versus 19, and at the tape level, you have names like DAIC up 306%, IESC down 53%, and RITR surging 38% on extraordinary volume. The market is not uncertain about what is exciting, it is uncertain about what is priced in and what still has room to run. That is the conversation right now. Thanks for listening. I will see you tomorrow. Until then, stay informed. Sign off. This has been your market news briefing for Thursday, August 25, 2026.